What's the first thing that comes to your mind whenever you think of the word audit? Ooh, scary, audit. When most people think of the word audit, it's rarely in conjunction with a personal financial plan. In this video, we're going to discuss the second component of creating a financial plan, which is a personal financial audit. Step number one is goal setting. It's the why behind the financial plan. What are we trying to achieve? What do we want to accomplish with money? And where are we trying to go? And then the second step is what we're covering today, which is the financial audit. Now, before we get into it, I know it can sound daunting, but it's pretty straightforward, so hang in there with me. Before we get into actually how to conduct your audit, let's first discuss what it is and some psychological barriers that impact many people when they're going through this process. The definition of an audit is an official inspection of an individual's or organization's accounts, typically by an independent body. We typically hear the word audit whenever it comes to a company's audited financial statements or when the IRS is auditing tax returns. But in the case of personal finances, it's really just a process to determine where we are at a certain point in time. Think of it like a snapshot of our finances. And remember, this is just simply to determine where we are today. Okay, now that we know what an audit is, let's talk psychology. Earlier, I mentioned how most people feel like the word audit is daunting or overwhelming. It's important to be aware that there are a few common psychological barriers that impact many people whenever they're working through this process, such as avoidance, guilt, shame, cognitive complexity, or a feeling like it's really overwhelming. So let's break a few of these down. Avoidance is when we choose to not look because we're afraid to know the truth. It's essentially the psychological equivalent of sticking our head into the sand. We'd rather not know than actually face the truth. Avoidance can often be accompanied by guilt or shame. Guilt is that emotion that we feel whenever we know we've done something wrong or when we are not doing something that we know that we should be doing. I know that I should be tracking expenses and doing my budget. I'm not doing that. I feel guilty for not doing that. Shame, on the other hand, tells us I'm not good enough. Both of these show up in different ways, and it's important to be aware of how they can impact your finances. Also, for many people, they've never conducted an exercise like this before, and so it can very much feel overwhelming and mentally complex. Especially for people who don't like thinking about money, this process can feel like climbing a mountain blindfolded. I'm not a therapist, but psychology plays a huge factor in our ability to be able to reach our financial goals. 80% of financial success stems from the way that we think and feel about money. And so it's really important for us to at least name these emotions, to understand what it is that we're feeling as we're working through these processes so that our emotions and the way that we feel aren't inhibiting our success. As you work through this process, I encourage you just to observe yourself. Be aware of the way that you are thinking and feeling as you're working through this exercise. If you begin to feel overwhelmed or begin to feel some of these emotions, it's okay to take a break. And it's okay to find somebody that you trust to talk with you through this process. For me personally, it's helpful for me to ask myself, what is it that I'm feeling? So I need to name what it is, and what is the underlying driver of why I feel that way? If I'm feeling very overwhelmed at trying to figure something out, it's often because of a mental or cognitive overload. And in those cases, I just need to slow down. In other cases, it may be that I just need to take a break. I need to go for a walk. I need to do something other than what I'm doing right now and come back to it at a later date. That's okay. What we don't want is to get so burnt out trying to work through this process and to feel so overwhelmed that we never do it at all. Being able to name an emotion or be able to determine what cognitive bias I'm personally struggling with helps me work through it versus just continuing to avoid it and never make any progress. I also encourage you to find somebody that you trust to work with you through this process and be easy on yourself as you work through it. Self-judgment does no good for us being able to get back on track. It's perfectly healthy and okay to acknowledge the mistakes that we've made in the past, but be careful not to live in the past. All right, now that we know what an audit is, and we've identified a few of the common psychological barriers that might impact our ability to work through it, how do we actually conduct a financial audit? While there can be additional nuance and complexity, especially for business owners and people who are entering retirement phases of their life, a few of the core components of a financial audit are cash flow examination, creating a balance sheet, debt load assessment, insurance and risk evaluation, investment portfolio analysis, and tax efficiency review. Now let's cover each of these a little bit. For cash flow, the best step is to track expenses from the past month. Figure out where your money is going and determine whether there is excess spending in areas that don't really match your goals. This is the first step that I recommend before creating a budget. The whole point is to look at all of our expenses over the past month, determine what we spent money on, categorize the expenses, and determine whether there are any areas in which we should have improvement. If you need a worksheet and a guide to walk you through this process of tracking your expenses, of creating a budget, I've created those resources. You can find them on my website completely free. Link is in the description below. If you've made it this far and you find the resources or this information helpful, I really do appreciate if you like and subscribe to the video. I know it's super cliche to say this, but it really does help grow the channel. And so thank you in advance. I appreciate it. The second step of this process is to create a balance sheet. And that's very simply adding up all of your assets, all of your liabilities, and subtracting the two. So assets would include your house, your vehicles, any cash that you have in the bank, all of your investment portfolios, any other assets that you have. Your liabilities will be all of your debts. So credit card debt, student loans, mortgage, auto loans, anything of that nature. And then your assets all added up minus all of your debts added up is your net worth. I've also made a worksheet to make this really simple for you as well. And so you can find that in a link in the description below. There are two versions of that. One is a spreadsheet in Google Sheets, and the other is a printable format that you can print off and complete by hand if you'd prefer. Those can be found completely free on my website, and you can download them there. The third step in this process is the debt load assessment. And this ties in really nicely with the balance sheet that you just completed. Since you've already added up all of your liabilities, then the debt load assessment essentially just takes this one step further. We want to look at all of the interest rates for each of the debts, estimated payoff dates for each of the debts, and this also helps us prioritize which debt we want to pay off first. I really like this approach because it reveals areas in which we can save money through excess spending, as well as systematizes the debt payoff structure. So the point of a financial plan is to determine where we want to go, where we are today, and what we need to do in order to achieve the goals that we initially stated. The more that we can remove emotion from the decision-making process, the higher the likelihood that we'll actually achieve our goals. And by creating a plan and already determining what steps that we need to take beforehand increases our success. Because then whenever we get to that point, we don't have to think, oh, what do I need to do next? We've already determined what we need to do, and now it's just following the plan. Now, when it comes to insurance and risk, that is a completely different topic for another video altogether. For the purposes of the personal financial audit, I do recommend at least accumulating and printing off or downloading each of the declarations pages for each of the insurances that you have. A declarations page is typically 1 or 2 pages long, and think of it like the summary for your insurance policy. It tells you what coverage you have, how much you're paying, and any other details pertinent to the insurance. Most families are underinsured in one way or another, and so I do recommend reaching out to an independent insurance broker who can assess all of the insurances that you have and be able to explain them and also look for vulnerabilities within your insurance plan. And the same with the investment analysis. Everyone's goals are different, and everyone has a different time horizon, risk tolerance, and needs. There is no one-size-fits-all approach to investing. For many people who are managing their own investments, a simple passive strategy produces higher results, statistically. And just a word of warning, be very careful of shills and the 100x investment bros that you see on the internet. While yes, the 100x return opportunities can and do exist, they are not the norm. And it's not as simple as people make it out to be. There is far more risk associated with these types of investments than people ever give credit for. Think about consistency over trying to catch that lightning in a bottle. And of course, the disclaimer, consult with a licensed advisor who can help you create an investment plan. I always recommend working with a fiduciary advisor because they are legally obligated to work in the best interest of their clients, meaning they're not necessarily affiliated with a broker. They don't have certain investment products that they are pushed to sell by their company, and they can provide the type of advice and the products that are best suited for your individual independent needs. They look out for what's best in your situation, not what's best for their commissions or their pocketbook. Lastly, a tax efficiency review is the final step in this process. Again, this is another huge topic. I recommend consulting with a CPA or a financial planner who can adequately assess your independent needs. Business owners, high income earners, and individuals who own income producing assets like real estate really benefit the most from more complex tax preparation strategies. There are certainly ways to mitigate tax implications for pretty much anyone, but consult with a CPA if you want the best advice for your situation. I realize that this seems like a lot, and as you can see, a few of these different steps don't really vary from situation to situation. Those first 3 steps of cash flow assessment, balance sheet, and debt load assessment, those don't really change. From client to client, those look exactly the same. And so if you're just getting started, I would recommend focusing on those 3 to begin with. And I realize that there's a small percentage of people who really love to nerd out over this stuff. And so if you want to get nitty gritty into the insurance, tax preparation, all investment strategies, all of those things, then by all means, go for it. For most people, they want someone to be able to counsel them, to provide some input. And that's where I would recommend, especially for those last 3 topics, consulting with a professional who can give you guidance based on your personal situation. I hope that this information has been helpful for you. I encourage everyone to do this 1 time per year. And just keep in mind, this first audit is going to be the most challenging. Each subsequent audit year in and year out after this will be easier. You will have done it before, you understand the process, and you already have a template from the year before. And so unless something significant has changed within your financial position, next year's audit should be much easier than this year. Ultimately, doing this process helps us remain flexible when our priorities and goals change, because they will. And it gives us peace of mind knowing that we are on the right track. If you have any thoughts or questions, I would love to hear from you. Feel free to post in the comments. Otherwise, have a great week.